So welcome to this week's wrap up. We can see that the S&P 500 here has came back into the zone that we were looking at last week, and as we can see here, we broke below, ended on Friday. Sorry, this is Wednesday, Tuesday, Monday. Sorry, ended Friday, yeah, down here. Monday opened up weak. Set in a really nice large doji / pin bar, and has since rallied really hard back into this zone of, you could also say this is resistance now, or you can also say this was a false breakout or break below this zone, similar to here. So just keep that in mind. This is an area of where price is getting really tested here on a slightly longer term time frame. And what we can see potentially is, pop higher, I don't know, 2840-ish area, probably a pullback into 2800, something similar to what's happened back in March. Now, if that's the case, then we can start to trend higher. If we don't do that, this would be the second option, and it would be possibly get rejected here in around this area, and then start to head lower. Now, I don't think that's an overly high possibility. I think the higher possibility, or probability, is for this to actually start to trend higher and to set a higher low. What we'd want to see is a nice Fibonacci retracement. So if we get a pullback, play to 0.5, and starts to reject here, we have an inverse head and shoulders pattern as well. So if we were to jump down into the 4R, see this a little bit easier. And let me get my drawn tool out. Where is it? So here's your left shoulder, head, and then the potential right shoulder would look to form in and around here. Now that lines up with the Fibonacci pullback, lines up with a higher low, and something we'd look at for a potential trade opportunity if the intradays such as the 4R and the 1R present themselves. Now, if that's the case, we could start to see a few targets to aim for. That would be in around the 280, 290 sort of area. And if you're looking to swing it for longer, possibly a little bit higher. Now, does it mean it's going to happen? Absolutely not. Now, what we can see is the potential for something to happen, and just get prepared for it. So that's kind of what we're looking at here on the S&P 500, is a quick pullback. See if this forms a inverse head and shoulders pattern. If it does, great. Right, then look for the signal then on the lower time frames. Does it match up to what we're looking for? Yes, great, take the trade. And if not, move on to the next one. So with that being said, let's move on to likes of volatility. This thing started to perk up a little bit on the S&P 500, the way it sold off recently over the past couple of weeks. So yeah, keep an eye on that one. Oil has been on a tremendous bearish trend since our analysis way back here. Really nice to see that actually happening. And so we're just waiting to see what happens next. There's nothing really, it's done a big move already, so there's not much more we're actually waiting on right now. Just need to stay patient and wait for opportunities to come our way. Lithium is starting to perk a little higher. I would like to see this zone here broken above and then retested as support, and see if this is a false break below this support zone. So with Bitcoin here, we can see that it has started to pull back into this area. What we want to look for then is something like this. So a lower high and Fibonacci retracement, and forming a right shoulder over the next week or two. If that's the case, could be a good opportunity to look for any short potential signals. And yeah, targets would be, I would say, roughly around here. Medium term, short term. So like 6,000 sort of area. Before we look to actually look for any potential longs in and around here. But again, waiting on signals, waiting if anything presents themselves, signals being the candle shape, on support, or sorry, on resistance here, on a couple of different other areas of confluence. So Ripple is not doing very much again, so patience needs to be exercised on this one. It's not really one you want to short at all. Just avoid for now. Wait until see what the other cryptos are doing and go from there. Gold is massively bullish over this past week. So yeah, you can see here from the 30th of May, it's just been complete monster green bars here. Lots of demand. We're bumping up against this massive long-term resistance line. Now, if we do start to break above this, that's a massive catalyst going all the way back to 2013. On the technical side, this is very, very bullish. We are looking here at a potential, if this starts to break higher, it opens the doorway to much, much higher prices. And I mean beyond 1400. We could head to 1500 or 1520 plus over the next 6 months to a year. If that's the case, this is quite a bullish chart. Zoom right out on the weekly chart here all the way back to 2008. You can see that we've went up and we've been in consolidation mode for the past, 6 years? So consolidating down here for 6 years. If we get a break out of this, this is a monster catalyst. You can't stress that enough. If this starts to get more momentum, if there's any news, if there's any global economic stuff comes out, this could be the safe haven currency that people are going to flock to, or safe haven asset that people are going to flock to, and something you need to pay attention to. Because if they do, it's going to get a lot of momentum, and this thing could start to head much, much higher. Uranium's nothing really interesting right now. It's starting to perk a little bit here. Drop down daily. Yeah, not an awful lot. Tesla is perking very well off this zone here. So remember last week we were looking here at this as a potential zone of support. Popped higher. If you look for intradays, you look for a higher low, something similar to what we're looking for in the S&P actually. A higher low, some from Fibonacci levels. And yeah, just some looking for those sort of any intraday sort of signals, candle shapes, price action, etc. So yeah, any questions you have for us, feel free to hit us up in our Facebook group or get us in chat, and we'll see you soon. Thanks.